Welcome back to Kyle's Financial News. I am your host Kyle, and today's date is June 24th, 2024. It is a Monday afternoon, and the markets just went a little bit sideways today, but the real kind of action, or the real attention, was drawn for another day over on NVidia. NVidia is having a 3-day fire sale. It is down multiple percent today. And after hitting a high of $140 a share or so in the overnight session a couple of days ago, it is down over 18% from there to now, sitting at about 116 at the close today. Bitcoin is also down some 18% from where it was about 2 weeks ago. So both Bitcoin and some of the tech is getting hit pretty hard. NVIDIA ended up giving back its crown to Apple and Microsoft, unfortunately, slipping back below their market caps. But I don't think it's cause for panic. I think before too long, NVIDIA will be back up there pushing against that ceiling, hoping to reclaim that title again for a little bit more permanent status. Their earnings just continue to be blowouts. So I don't see how, at least in between now and their next earnings, there will continue to be some hype and some momentum to carry them back up further. Though having just recently split, there has been some large cap companies in the past that very shortly after splitting, the stock cooled off for 20, 30, maybe even a little bit more percent. So yeah, I could see it going either way, honestly. I mean, I'm not here giving trading advice saying one way or the other, and I don't hold any NVIDIA shares. But if it came down to a attractive price level in the near future, then I would certainly consider picking some up myself. Bitcoin, cryptocurrency, on the other hand, is also taking a little bit of a backseat, which some people see as odd with so much ETF traffic and inflows from bigger investment firms and availability now. It's becoming available to people through their retirement accounts, their investment accounts, like their traditional stock brokerage accounts, also through their 401ks. Like, there's a number of ways that people can now invest into paper Bitcoin, kind of like gold though, and paper gold, when it's really exploding or doing surprisingly well. I don't really want the paper version of an asset. I want the physical asset. And I know Bitcoin is not necessarily physical, I suppose, unless it's in like a hard wallet, but I think you understand my point. I don't want a derivative of the asset. I want the actual asset. So you would think, though, with all that derivative action going on, it would at least be affecting it in a positive way. Well, maybe not quite necessarily the case. With so much interest in people wanting to get in on it, I think the market is maybe holding off on the demand and letting the supply kind of sit there and cook for a little bit before jumping in. If I'm looking to get into crypto for the first time, at least, right? If it's just now available to me in my 401k, I'm just now allowed to buy some of that through my stock brokerage account, and maybe I've got some NVIDIA profits I'm looking to exercise on, and I'm looking for a new type of investment to maybe move it into. Well, Bitcoin and cryptocurrencies could be that investment that shoppers are looking for, but new shoppers, first-time buyers into crypto aren't going to want to be buying it at all-time highs. They're going to want to feel like they're getting a deal, they're getting it low. So if we see a 30-40% dip on Bitcoin, I would not be terribly surprised there either. We will just have to keep an eye on that. It has been falling pretty sharply within the last 24 hours or so, down about 4.5%. It dipped down to just above $58,000 a coin. So it's getting a little bit intense over on that side. And the long-term ramifications of a crypto market cooling off, you have to think of Coinbase and the exchanges, Binance, and who else? Square, PayPal, these companies that deal with crypto or act as a kind of a middleman for that and make some of their revenue on those fees when crypto is really nosediving or in the dumps, we've seen before, people aren't trading. You have some of the day traders and the really active, maybe high frequency traders or shorters. Sure, they're jumping in there and they're trying to take some action on that. But you don't see a lot of the everyday Joes trading during those time periods. So that could be some evaporation of some income revenue for some of those processing companies. Something to keep in mind. Looking at indexes though, let's take a look at S&P 500. It's going pretty much sideways. Let's take it VT, Vanguard's Total World Stock Index. It's going pretty much entirely sideways. They're hanging on to this pretty well. They're showing the economy, they're showing investors it's not time to panic. Maybe we're seeing a little bit of exhaustion on these super fast growing AI focused, technology companies like NVidia and the likes. But the rest of the economy is doing reasonably the same as it was a couple weeks ago. So I don't think the fundamentals haven't really changed to justify a big sell-off here. This is going to be some impulse moves to just kind of shake the tree per se, and get a bunch of people to create some volume and liquefy their positions. Jumping topics here real quick, an interesting article that I saw posted today and kind of goes hand in hand with the underlying economic kind of fundamentals that are going on right now. The U.S. Transportation Security Administration said it had screened 3 million airline passengers on Sunday, the highest number ever in a single day. The agency also said on Monday it expects to screen more than 32 million travelers during the 2024 Independence Day travel period. So that runs from Thursday, July 4th through, I suppose, Sunday, Monday, probably July 8th. Apparently 32 million travelers comes in at 5.4% higher than 2023 levels. That is a surprising number. 32 million people. You're talking about 10% of the entire population of the United States is planning to be traveling for the 4th of July. Those numbers are huge. And to see a 5.4% increase from 2023 levels, I mean, are we not back? Are people not spending money? They're buying gas, they're buying plane tickets, they're buying fireworks. There's no greater testament to blowing away your disposable income than by lighting a fuse and literally watching it explode in the sky above you. Still, all I hear is people don't have money to spend, their savings are exhausted, and it's a crunch, and people can't afford gas, they can't afford food. I'll just come out and say it. I don't believe it. Anyways, I probably shouldn't dive too deep down that avenue. I'm all for celebrating the 4th of July and our independence, and I will be celebrating the 4th of July with my own friends and family. So I'm not saying don't be out enjoying it and buying fireworks and all that good stuff. Just that, the irony is abound where you hear all this mainstream media, all these talking heads online, you see all this commentary through social media saying how bad everything is, but when you look at the numbers, it's hard to agree with that. The numbers don't lie, and the numbers are saying people have money to travel, people have money to spend. So that's all I have to say for that. I'm excited to see what we end up with tomorrow. Tomorrow's a new day, and hopefully NVIDIA can put some brakes on their free fall here, as well as crypto. But if not, then we will just have to see where they end up landing tomorrow. So thank you so much for watching. Please consider liking and subscribing. I will catch you later.